Hey guys, David from the Trade Study here. Going to talk about Boeing and a little bit about ascending triangles. What is an ascending triangle, you may ask? Ascending triangles are similar to other triangles like symmetrical triangle or descending triangle. Ascending triangle is usually a bullish case that has a flat level of resistance. As you can see here on the 240 around here, you have price trying to break 240. They were selling nearly around here, the same thing. And if we go back to March, we see that it has a wick there met by some selling, and the stock dropped due to coronavirus pandemic and a whole bunch of mess happening there. So when we look at this, we have this flat level of resistance, and then on the slope upwards here, causing a shift and increase of buying. There's a demand for the stock, right? It reached a low of $89 per share. That is quite the bargain on a name like Boeing that used to be traded at around $300, $400 per share. Let me remind you that this is a weekly chart. This is a chart that has each candlestick here representative of a week's worth of trading. There is a lot of activity going on in each of these candles. As you can see, if we go to the December 24th here, there was so much buying. A EMA crossover of the 9 to the 21 EMA. Check out my EMA video for more explanation on that. Bullish signal right there, triggering even more buying, pushing up, breaking out, reaching that high of $446 per share. Fast forward, we have the virus, we drop, and the reason why I'm talking about this little section here is that when I zoomed in, but if you look at, let's say, let me highlight that. This was a breakout of almost 291 to 446 within a couple weeks here. So when we fast forward to where we are now, and we have that 240 price level, and we have this big drop that happened, we have quite a lot of ground to cover in this range here for the stock to meet a significant price level where you're going to have sellers say that the stock price is too high, and that they're going to say on top of that that the stock should be at a lower valuation, and that causes the trading of the candle to go downwards towards a lower stock price. On the other side of the coin, you have buyers that are pushing this upwards in this range. As you can see from the trend line going upwards, you have higher lows. And this is key in an ascending triangle. Higher lows over weeks' time, months here. This is practically a whole year right here that we're looking at, where this stock buying is happening, and it's just getting tighter and tighter, as you can see in this chart pattern. And this is a year's worth of time right here where we're seeing all this buying generate, and now we're reaching that 240 level again. Well, guess what? We reached that 240 level this week on Monday or Tuesday, I think it was. And here you go. You have a big green bullish candle with strength. Look at that full body. That is incredibly strong. It broke out to the upside. I think it hit like 270 in after hours on Friday. And the reason why I'm highlighting this is because look at this range that we're in, that I have outlined by the risk that we're risking to that significant price level versus the potential reward as we enter this wide range on the weekly chart for an amazing upside to this trade. I mean, you can own the shares as well, but I'm not going to get into that. This is just talking about the significance of a ascending triangle and this unique investment opportunity that, to me, is such a beautiful high certainty play that I'm okay with even the option of day trading options or shares, taking advantage of the high volume and liquidity that is being presented in that situation. Or the other option is swinging options contracts with months time out. You can do that. You can set it and forget it as long as you remember that the amount of money that you're putting in is the money that you're okay with losing. So the idea here is you could go for contracts that are probably 3 months out and you'll cover enough weeks time, about 12 weeks, right? In 3 months, and you can anticipate something similar of this move that we talked about, or a move kind of like we saw here. And you have this wide range where it could even get to the point where we pass 325 and then we're in this next range as met by resistance. As you can see here, we got a wick that ends here, a wick that ends here, and a wick that ends here. So somewhere around those lines where you're going to reach another significant range where you're not going to have a barrier or selling point, a resistance until a while out. So the idea here is ascending triangles over a larger data set of time has more data, it has more validity and strength to your case versus a shorter time period. There's going to be more fluctuations. And let me be clear, it is not always going to be a breakout to the upside. It can definitely go to the downside as well. But generally speaking, you look for this continuation pattern to go off, and you look for that opportunity to take advantage of it. And there's many different ways to trade it. I just wanted to give a quick explanation on it and kind of present this unique opportunity because there is so much going on in this trade right now. This is just talking about technicals, but there's also news surrounding it. As you can see, this is on the Thinkorswim platform provided by TD Ameritrade. There's a whole ton of news going on with Boeing, which you can bet is driving the stock price up. The stock price is going to go up, trading activity increases, and if you're an options trader, guess what? Those options contracts are going to have increased premium due to increased demand from people wanting to trade this and get a piece of the pie in action. So guys, that's a quick summary of what's going on here. I hope you enjoyed it. If you like more videos and contents, like and subscribe. Let me know if you have any questions. I'll be glad to help you out. Have a great one.